Today we're joined by Bart Melek. He's the head of commodity strategy for TD Securities. Bart, thanks for being with us.
No, it's my pleasure. Thank you very much for inviting me.
Bart, what's your general sentiment when you're looking at gold these days?
Well, gold, I think, is having a bit of a rebound from the very aggressive sell-offs we've seen a while back. And technically speaking, we could still see some upside in the coming days or so. But fundamentally, our view is that gold continues and will continue to be in a bear market longer term, and that is mainly due to the fact that we expect yields almost across the board to start increasing more and more as the months and years move.
And Bart, what are your thoughts on this talk on tapering? I know in past interviews you've said that you expect stimulus to continue, but what are your thoughts on tapering, and how much do you think this word is weighing on gold?
Well, I think tapering is pretty much a done deal. The only real issues are whether it happens in September or a little later, and the magnitude of this tapering. But I think the consensus right now is building towards a September tapering, probably starting off with a reduction in asset purchases by $20 billion or so. I think this is the environment we will be in, and gold had reacted initially to it in a very negative way. We saw a very aggressive sell-off from physical ETFs. We saw speculators go very, very short in the market. And now I think, at least for the next little while, the market is getting comfortable with the idea of tapering. And that resulted in a bit of a comeback in gold in the last few weeks or so.
You mentioned ETFs bleeding, Bart, and last week we also saw John Paulson pull out half his positions from the Spider Gold Trust back in June. This news released last week, however. Does news like this concern you?
Well, I think that news has been priced in a while back. There's other news that counteracted that negative news to some extent. The news that Asian physical buying is robust, and expectations that will continue to be the case for the next few months gets us to believe that given that the big long liquidators are out of this market, we could see some upside, albeit I think temporarily.
Bart, let's talk platinum now. I know in the past you've suggested that platinum could outperform gold. Is that still your sentiment?
Yes, we do. We think the demand environment for platinum will improve with Europe coming out of recession. Europe is the biggest auto-catalyst user of platinum in the diesel engine platforms, and as that improves, the supply-demand fundamentals for platinum will tighten up considerably. In fact, we expect that metal to be in a deficit for the next few years at least.
We've also seen silver outperform gold recently. Bart, is that surprising to you?
Not particularly. Silver, as we know, is much more volatile than gold. It tends to have deeper troughs and deeper corrections, and conversely, it tends to have stronger recoveries as well. So not a huge shock for us. Plus, on top of being a gold-like metal, silver is very much an industrial metal as well. And if you come up with the hypothesis that the U.S. economy will increase demand for commodities, China and Europe, one would be well suited in saying that silver demand may be fairly decent as well. After all, silver is, for the most part, used as an industrial metal.
So wrapping things up now, Bart, would you say you're bullish on gold?
Well, we're bullish for the relatively short term, but however, over the longer term, as these interest rates do start rising more convincingly, as we do actually see the Fed reduce these purchasing programs, we do see gold dropping to sub $1,200 in the second quarter of 2014.
On that note, Bart, thanks for being with us.
Okay, cheers. Thank you.
And thanks for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Camboni. Thanks for watching.